Hello everyone and welcome to the SBI Securities Weekly Wrap podcast. So first, let's discuss how the markets have been in the week gone by. Indian benchmark indices ended the week on a strong note to close at record highs. The indices closed in green for the third consecutive week. For the week, Nifty and Sensex closed with gains of 0.7% and 0.9% respectively, while mid-cap and small-cap indices underperformed. The BSE mid-cap index ended flat, that is which was up 0.1%, while the BSE small-cap index corrected 0.4%. Positive global cues, upbeat 3Q FY24 GDP data, strong Feb 24 auto sales, robust GST collection and favorable macros were the key contributors to the rally. India's GDP recorded a growth of 8.4% YOY in 3Q FY24 vis-a-vis RBI's expectation of 6.5%. Better than expected GDP reading led to upward revision for the full year FY24 GDP growth estimate to 7.6% versus 7.3% anticipated earlier. Manufacturing and construction were the key contributors while agriculture showed a decline. GST collection for Feb 24 was at Rs 1.68 lakh crore, which is positive by 12.5% YOY. Auto sales for the month of Feb 24 remained upbeat as PV and two-wheelers registered strong growth while CV and tractor segment were lower on YOY basis. US market too ended at record highs as indices registered gains between 5% to 6% during Feb 24 despite lingering concerns related to inflation. The preferred inflation gauge, which is the core PCE of US Fed, grew 0.4% in Jan 24, which was in line with expectation. Aspects to look out during the next week are: next week will be a truncated week as markets will remain shut on Friday on the occasion of Mahashivratri. Global cues will play an important role in the absence of any major domestic triggers. We expect stock-specific action to continue based on the news flows. Going ahead, the index is likely to continue its northward journey for the coming week. Talking about the weekly sectoral gainers and losers on BSE, except for BSE Oil, IT and Healthcare, all the other sectoral indices ended on a positive note. The BSE Cap Goods, Metal, Consumer Durable, Power, Auto, Bankex, Realty, PSU and FMCG were the biggest sectoral gainers with weekly gains of 4.3%, 3.3%, 2.8%, 1.4%, 1.2%, 1%, 0.7%, 0.6% and 0.1%, while healthcare, IT and oil were the sectoral losers with weekly loss of 2.2%, 0.9% and 0.04%. Moving on to the weekly Nifty 50 gainers and losers. The top gainers in Nifty 50 during the week were L&T, Tata Steel, Tata Motors, Tata Consumer and IndusInd Bank, while top Nifty 50 losers were Apollo Hospital, Bajaj Auto, Asian Paints, LTI Mindtree and Tech Mahindra. Now, taking a check on some key monitorable. For the week, both FIIs and DIIs net bought rupees 3,978.1 crores and rupees 8,268 crores respectively. Brent crude increased on week basis from $82.5 per barrel to $83.5 per barrel. US 10-year bond yield cooled off from 4.3% to 4.2%. This was mainly due to personal consumption expenditure PCE marginally increasing by 0.3% monthly and by 2.4% on a 12-month basis, which was in line with expectations, and the market expects the rate cuts to happen in June. Now talking about the key domestic and international economic news. So first one is India's 3Q FY24 GDP growth at 8.4% YOY. India's gross domestic product at constant prices in 3Q FY24 grew 8.4% YOY. The growth in gross value added at constant prices were led by manufacturing, positive 11.6% YOY, construction, positive 9.5% YOY, and electricity and utilities, positive 9% YOY. GDP growth for FY24 was also revised higher to 7.6% YOY versus 7.3% in the first estimate. Second, core sector growth at 3.6% YOY in Jan 24. The index of 8 core industries grew 3.6% YOY in Jan 24 at the slowest pace in 15 months. The growth in the index was led by coal production, positive 10.2% YOY, followed by steel production, positive 7% YOY, cement production, positive 5.6% YOY, natural gas production, positive 5.5% YOY, and electricity generation, positive 5.2% YOY. The growth in the index was offset by petroleum refinery and fertilizer production, which contracted 4.3% and 0.6% YOY respectively in Jan 24. Third, India's manufacturing PMI at 56.9 in Feb 24, which further recovered from its 18-month low of 54.9 in December 23. Now moving on to corporate developments, where we'll be talking about the companies which were in focus during the week. So first one is Reliance Industries, where the company announced the merger of its media business Viacom 18 with Disney Star India to create a rupees 70,352 crores joint venture. Reliance, Viacom 18, Disney will hold 16.3%, 46.8% and 36.8% stake in the new entity. So positive for Reliance Industries in long term. Bajaj Auto, the company reported total monthly sales volume of 3,46,662 units in Feb 24, which was up 24% YOY. The two-wheeler segment registered growth of 25% YOY at 2,94,684 units, while CV segment reported sales of 51,978 units, which was up 16% YOY. So positive for Bajaj Auto in short term. Escorts, the company's tractor sales volume declined 17% YOY to 6,481 in Feb 24. Domestic and export volumes were down by 16.6% and 22.3% YOY. Construction equipment volumes were up 30% YOY to 611 units. So Escorts will be in focus. Mahindra & Mahindra, the company reported total sales of 72,923 vehicles, including exports, registering a growth of 24% YOY. In Feb 24, the company's SUV sales volume stood at 42,401 vehicles, which was up 40% YOY, while total exports contracted 32% YOY at 1,539 vehicles. The tractor segment reported total sales of 21,672 tractors, which was down 16% YOY. Domestic sales contracted 18% YOY, while export of tractors grew 32% YOY. So overall, positive for Mahindra & Mahindra in short term. Next, Coal India has signed a joint venture with Bharat Heavy Electricals Limited for a coal to ammonium nitrate plant. The company will hold a 51% stake in the joint venture, while BHEL will hold a 49% stake in JV. So positive for Coal India and BHEL in long term. Welspun Enterprises, the company has received a letter of acceptance worth rupees 4,124 crore from Brihan Mumbai Municipal Corporation for design, build and operate contract for development of new 2000 MLD water treatment plant at Bhandup complex, including civil, mechanical, electrical and instrumentation. So positive for Welspun Enterprises in long term. Dilip Buildcon, the company has received an order worth rupees 1,955 crores from NHAI for the construction of 4-lane Urga Patalgaon section in Chhattisgarh. So positive for Dilip Buildcon in long term. SJVN, the company's unit bagged a 100 megawatt solar power project at a tariff of rupees 2.64 per unit through competitive tariff bidding conducted by Gujarat Urja Vikas Nigam. So positive for SJVN in long term. Salasar Techno Engineering, the company has bagged an order valued rupees over 200 crores from Zetwork Business for the supply of 25,000 metric ton of solar structures. So positive for Salasar in long term. HFCL, the company bagged purchase orders worth rupees 40.36 crore for supply of optical fiber cables. So positive for HFCL in long term. GE T&D India, so the company secured orders worth rupees 370 crores from Power Grid Corporation for supply of 765 kV shunt reactors for various transmission system projects in India. So positive for GE T&D India in long term. Power Mech Projects, the company received an order worth rupees 396.3 crores from Southeast Central Railway for execution of civil construction and electrical works. So positive for Power Mech Projects in long term. CG Power and Industrial Solutions, the company's joint venture with Renesas Electronics Corporation received approval from the Union Cabinet under the Indian Semiconductor Scheme. The company will invest rupees 7,600 crores to set up a semiconductor unit in Gujarat. So positive for CG Power in long term. HG Infra Engineering, the company emerged as the lowest bidder for construction of 66.9 kilometers of EPC double line track worth rupees 709 crore from the East Central Railway. So positive for HG Infra Engineering in long term. Now moving on to pick of the week, which is our product, where we have given a buy call on Larsen & Toubro Limited at a CMP of rupees 3,490 with a price target of rupees 4,105. So L&T, it is one of the leading E&C companies, that is engineering and construction in India, and has a well-established track record of executing complex infra projects. Now talking about the key growth driver, the management expects FY24 order inflow to be 20% plus versus 12% guided earlier, while FY24 revenue is expected to be in high teen. Consolidated revenues are guided to grow by 12 to 15%. Talking about the order book, it has a very strong order book, and as of December 23, the company has a total order book of rupees 4.7 trillion, which is 2.3 times of its 9-month FY24 annualized sales, and thus provides healthy revenue visibility for the near term. And the 9-month FY24 order inflow stood at rupees 2.31 trillion, which indicate that it crossed the full year FY23 order inflows. Talking about the valuation, at current price, the stock is trading at 36.6 times and 28.4 times of its FY24, FY25 Bloomberg consensus estimates. Corporate actions for next week. So for key corporate actions in next week, kindly refer to our weekly wrap report. The link to view the report is shared in the description box below. So this was all about the weekly market podcast. Thank you for listening.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.